Hello, YouTube. The stock market just had its best day of 2023, which means stonks are back. Almost everything is rallying, and it looks like that Moody's downgrade, which is what people are calling it, was a trap. And now the bears are like, oh my goodness, what is happening? Well, it was a trap. And this is so interesting because we finally got the CFTC net short positioning data, and it shows us that they actually added back 50,000 contracts short going into last Friday. I got this as of this morning. And we have more data coming out tomorrow, which might help to continue the story of peak inflation. That's the reason why the market's up today and went up dramatically. We can also note that I'm making a little bit of fun of the bears today, but man, this is normal, right? 5 to 10% corrections are normal, and they usually get recovered within a month. Well, that's exactly what happened. So let's see what happened in the stock market today because, oh my goodness, was it pretty incredible. We're going to look at daily charts in a moment, but remember how we talked about the S&P moving a 1% move on CPI? Well, the S&P is up by 2%, the NASDAQ by 2%, the Russell is up by 5.5%. Regional banks are up by 6 or 7%. This is incredible. So it was not just a 1% move, it was a 2% move and a perfect bull pivot off of our channel break. Why does this matter? Because we were looking at QQQ as our template, and oh my goodness, did it already do it. We talked about how it's actually bull pivoting off our 78% Fibonacci area at 375.66, and it looks like that was a buy. Everything's been a buy. So looking back to the market or the S&P, this is where I'll be watching whether or not we can actually make it to 451.76, notably because we have everything rallying. We're going to look at some charts in a moment, but man, if I was bearish, I'd be looking like Jerome Powell right here. A little bit cautious. Why? Looks like they're trapped, and this is probably getting pretty painful for them. It's been a long year. They were short back to July of last year, finally go long, and they're like, that's it. Market's going to top. We got the Moody's downgrade of the outlook, and they piled in. We'll come back and talk about this in a few minutes. But this is really where I want to focus for right now because this is normal. It's normal for us to have a 5 or 10% correction, and we actually got 2 of them. So right now, on the day, we made it over 450. That's like pretty significant. Why is it pretty significant? Because look at the levels here on the S&P 500. If we look here for ES is now at 45.14, or basically already at that 70% Fibonacci area we're looking at, 45.29. We made it to 45.24 today. That's the high of the day. If we look over here on SPX, this is where the story gets a little bit more tricky because we did make it to 4,500, but we are now just below it. If I'm confusing you, all you need to know is that if we're only looking at SPY, we're only going to see part of the puzzle. And before we go further, I'm going to ask you for a huge, huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. And I'll thank you ahead of time. All right. So let's look here at a couple of pretty impressive charts because, wow, have we got gaps. We got 1, 2, 3, 4 gaps now on the S&P 500. That's pretty incredible. If we look over here to the Russell, well, the Russell actually gapped on the 50 MA and then pushed off. We call that a green dildo. Why? Because there's no wicks. And from low to high, it's the open to close. Wow, right? There's no wicks. That's a strong candle, which usually implies upside momentum. We can also note that we're closing near the high of the day, but we are stuck between the 50 and the 200. So if we're going to get another shot higher, I would be looking for that. We can also look at KRE, Regional Bank ETF. Very similar here where it gapped up, pushed up, almost made it to the 200 MA though. This is really notable because the story that we saw today is CPI coming down to 0.2, headline CPI coming down to 3.2, and then CPI on a month-over-month coming in at 0. Well, like we talked about before, the Fed might have actually hiked too much, and that would be my concern right now. But anyways, when we look to regional banks, why would they be getting such sweet, sweet relief, up by 7.5% today? Because if interest rates are not going to go up anymore, maybe they can finally stop losing money. We've been talking about the solar sector as well, and we can note that the solar ETF or TAN is up by 10% today. Why? We talked about it. Solar usually makes high single digits, which means like 7, 8, maybe 9% in terms of interest. Well, we've had interest rates quite high in the short term, which means they don't have any profit. So this one going higher by double digits definitely gets my radar buzzing. ARC up by 5% today, over the 50, over the 200. And Kathy Woods was on Bloomberg today talking about, everything bullish. So this looks pretty good too, 5%. We move over to SMH. Chips are leading tech, and tech is leading SPY. Oh my goodness, is this a record close? Wow. So if we look here on a weekly, 161.04 was our 161.17 is our previous high. We closed over that, and this is a record. This is a record close. We look here to a line chart. Yep, that's above the previous tops. Record close for SMH. Wow, that's pretty impressive. We look over here to RSP, or equal weight S&P 500, which means we're seeing breadth and depth actually come in. This is up by 2.8%, or actually beating the S&P 500, which is quite good because we're seeing that breadth and we're seeing that depth. One thing which was not happy today, though, was Bitcoin. So we can note that Bitcoin is a notable loser. It's currently pointing down, and it is below its relative high. So I do want to come back to this one in a few minutes because I think this might actually act as a template for us to look at the broader market because, wow, one rip, two rip, and then one massive rip, and now we're starting to fade. We're starting to point down. And there's always going to be those warning signs for when we go down. So we talked about the dollar potentially getting damped. Well, it's down by 1.5% today. VIX is down to 14. As a reminder, when we're in the low teens, like 13, 14, 15, right? 14, 15, 16. It means the market is calm, cool, tranquil. There is nothing to worry about. And the 10-year note got a nice stomp below the 50 MA. It is currently down by 4% to 4.45%, which means that's a nice crush. As this line goes down, it usually means the stocks go up. So why is crypto down? Is this still our leading indicator? I do want to come back to this in a few more minutes. But what I want to talk about first is going to be the fact that these bears might get hurt even more tomorrow. So what I want to be prepared for personally, and I'm going to ask you for a favor one more time. If you could please just smash a thumbs up, because I think I've done a really good job to prepare you for the market, and the extra streams, I think, really helped because we've been talking about this exact narrative, and we're watching pretty closely here. So what I'm talking about is that CPI is really what drove the market today. We might see recessionary signals out of Japan. That's going to come out at 6:50 tonight Eastern time. That'll be in a couple of hours. We can also look here to tomorrow, where Great Britain's going to see CPI again. The forecast is that it's going to go down to 4.8. We're going to see retail sales actually go negative. PPI is going to go down to 0.1, and then retail sales are going to come down to 0.1. And then for Thursday, we're going to see initial jobless claims actually tick up a little bit. And then the PMI, we're looking for that same thing. And as I'm thinking about all this, we were talking about the seasonality chart yesterday, and it looks like this thing is really working like a charm. And yes, I understand it's not a perfect template. Why? Well, because I'm currently looking at the delayed effective where I think we were still in October, where this right here acted as a perfect move. Boop. So we just made it higher. And in the title of the video, I think I put how high, and that's what we're going to talk about right now. How much higher can we really go? So we just got a dramatic move, right? Oh my goodness, best day of the year. Now I'm expecting a little bit of chop here, and then we can get another leg higher. Well, that other leg higher might come right now. We talked about only being able to go higher from here. So if we're only going higher from here, what would that mean for the entire market? Because, oh my goodness, have we left gaps? 1, 2, 3, and 4. And we're seeing charts actually go to blue sky territory like SMH. So what's really interesting is that every time we have this yellow box, eventually we hit the 50. But this time it might have been close enough. We already went through that story. So what I want to pick up on now is, if this is going to truly play out, I want to see whether or not we get up here towards 451.76, basically 452, which would mean we're over SPX 4500. And I'm looking to see whether or not NASDAQ's going to keep leading us. So SMH is currently the number one gainer, already in new all-time highs. QQQ, not that far behind, but if we pop over here to XLK, we're already in new all-time high territory too, because this one cares more about Apple and more about Microsoft. 50% for Apple and Microsoft, where QQQ is more equally weighted for the broader NASDAQ 100. So what I'm going to be watching for specifically into tomorrow for how high is, man, can QQQ actually make a new high here? We're looking at 388. If we look here to our weekly chart, we're going to note that right here, going back to the start of the channel. This is our July high, 387.98. We're currently at 386.26. So it's looking pretty good, to be honest. We'd be looking for a full retracement or a 100%, which I currently have hidden. So that would be a blue line across here, which would take us to 408.71. So Finally, now looking at the chart, because this is starting to feel like it's a little bit exhaustive. An exhaustion gap might be what we get tomorrow. And that's where the bears are going to go from, oh my God, this is painful, to, oh my God, it's time to get out. So if the data came in like this and we were expecting a bullish move, now the question is, did we actually see a tick higher in fear and greed? Well, for a large part of the morning, we did not. We were actually stuck at 41. Now we're here at 47 in neutral, which was one of my key signals that we were going to keep going higher. So make this really simple for me, Justin, because you're talking fast, you're going through a lot of things, and I'm getting a little bit confused. Well, 5 or 10% corrections are normal. On the weekend, we talked about how we had both a 5 and a 10% correction, which is the reason why on this chart, or the weekly chart, we actually have both numbers written out right here. It's 413.5 and 436.5. We hit both. And now we're dramatically higher. So if we look back to the screenshot, the average time it takes to recover from the losses is about 1 month. Well, 1, 2, 3 weekly candles, we've pretty much recouped the whole thing. Nice. For us to get a full retracement, we're looking for a move up here to 459, which is about 10 more points for the S&P. So if the NASDAQ can now get over its 52-week high, basically what SMH did, I would expect the S&P to get dragged higher. If QQQ falls below 388 after claiming it, or we print a daily lower low tomorrow, whether that's on a lower high or a higher high, I'll be looking for the start of a retracement, which means the start of a sell or the start of us to fill these gaps. The reason why this is particularly notable to me too is because if we look here, if we form a weekly higher low next week, it means that we're just looking for 375.24 to hold. So what that would mean is that we're actually going to get another bounce here on our retracement area, 375.66. That would be bullish. So if we fill the upside gap, we would actually leave a little bit of room to actually form that weekly higher low. That's really important, because if we're truly only going higher low, higher low, higher low, higher low, higher low, higher high, higher high, higher high, then we better start forming those higher lows and higher highs. All right. So that's what I'll be watching for. And then finally, if we do get another gap higher tomorrow, what I want you to be very mindful of is that a 1% move from where we closed out today is what? Well, 0.8 gets us to 452, or that key area. If we gap up by, say, 1%, we'll be roughly here at our September high. So our September high is at 453.67. That'll be really important. Why? Because we could see an exhaustive move. An exhaustive move would look something like this, where we get another gap up, we ultimately flush. Another example would be, that led to a pretty nice corrective wave. Another example would be right here, where we form a higher high, but we print a lower low. And then ultimately we get that sell that goes through as well. We've been talking about this exact same pattern. And there's one more here actually, which is we were talking about how if we keep forming higher lows and higher highs that we're bullish, but here's that exact same pattern right here. So we have that pattern. It's right here. Higher high, lower low, close below the low. That's a bearish engulfing daily candle. That's an exhaustive move. And that led to a dead cat bounce and then a secondary cut. So with all of this said, I think that as of right now, we're currently in the pain part of the trade for the bears, where they're going to have to decide if they want to get out where they were. If they initiated a perfect trade last week, their average is going to be at roughly 441. So 50,000 contracts are getting smoked right now. I would assume that if we backtest and form a higher low next week, they would want to buy and get the hell out. Why? Because we showed you all of the charts which are signaling that the market wants to go higher. KRE is up by 7.5%. That's regional banks. TAN up by double digits. ARC, this chart is up by an incredible 5%. So there's a lot of things that are really moving right now. And then finally, what I want to look through here is going to be our below 50 DMA group to see whether or not there's more charts which are actually joining us in that. Actually, no, there's something else I want to point out here. I know I'm bouncing around, so I apologize about that. There's one more thing I want to point out here, because when I said it's a bull market for dummies, this is what I was showing here. It was these two charts, and this is 1 day delayed. So please just take this with a grain of salt, because I'm sure it's going to be dramatically higher tomorrow. We're looking at two charts here. The first one is S5FI, which is going to be S&P 500 stocks above their 50 DMA. And now I would assume that we're going to get a threshold of 50%, because this will be updated tomorrow for today. We talked about these extreme readings where we hit a low of like roughly 10, which means that only 1 in 10 stocks are actually above their 50 DMA. dramatic rally, dramatic rally, dramatic rally, dramatic rally, dramatic rally. We'll focus on these most recent periods right now because you're going to remember these. June of last year, right? Remember that? That was a big move. We talk about September. That was the low, September and October. And then we got the February, March one here. That's going to be SVB. And then we also have one right now. Whoa! But do we stop at the 50-yard line? Nope. When we get down to 10, we usually make it to 50, and then we go all the way up to like 90. Make it to 50, go up to 90. Make it to 50, fizzle. So this might be a fizzle. If it's not, we're looking for a move back up to 90, which would be 1, 2, 3 out of the last 4 times. This chart looks pretty bullish to me. Hopefully you're following along. If we look at the next one here too, this is S&P 500 charts, which are above their 200 DMA. So it might be a little bit hard to see, but this is above the 200 DMA. And an extreme reading on this one is roughly 25%. So we see that's the lockdown low. Same thing here, June of last year. We also know we got October, which was the low of last year. And now we have the most oversold condition going back to the low or the bear market bottom of October of 2022. And we're almost at that 50% threshold. So this is really, really, really nice to see. So if we're noticing that all these things are happening, as a reminder, we're going to have Joe Biden and President Xi meet tomorrow. So let's look at FXI and see what this one's doing. Oh my goodness, it's over the 50-day moving average. Oh, this is starting to look a little bit better. Dare I say even bullish? A measly 2%. Come on, you can do better than that. So Joe Biden and Xi will be meeting tomorrow. So I think there's a lot of pent-up demand on these ones here, which I think we need to see actually manifest. Looking to emerging markets or EEM. Over the 50, over the 200, closing at the high of the day with a green dildo. Nice. We even see volume coming in. Nicer. All right. And then the last one I want to look at here is going to be NYA. So New York Stock Exchange is up by 2% over the 50, over the 200. So note, a lot of stocks, or the average NASDAQ stock, average NYSE stock, which is going to be about, I think it's 2,000 stocks, are now on average above their 200 and their 50 DMA. Nice. So last charts for us to go through here, Bitcoin and Ether. So if we're going to get that same classic signal, did Bitcoin already give us that clue? Yes, it did. So maybe not an exhaustive move. This right here was an inside bar. So we get a big blow off. Let's zoom in nice and close because I know it might be a little bit hard to see. So let's just make sure we watch for the pattern, because until then, we're probably going to see some more noise in the chart. Exhaustive move. I form an inside bar, form another inside bar, form a third inside bar, or form 3 inside bars. And then what do we get? A bearish engulfing. And then we close below the low. And then we get a rejection off our key relative low. And then we fall back below the low again. So that would be exactly what I'm looking for. The exact same thing we just went through on the S&P. So we're currently pointing down. We lost our relative high. And we formed a bearish engulfing with lower highs and lower lows after multiple inside bars. Let's now see what that would look like here on SPY. Well, right, what really depends here is whether or not tomorrow we form another higher high. If we do, I'll be watching for it. I'll give you the example right here because it might be a little bit easier to follow. Actually, no, we can look back to here. So if we look to here, we get another gap up. We form an inside bar. Inside bar breaks bullish. So then we keep the squeeze going. Same thing. I think the video is already long enough, so I'll probably leave it there. If you want to watch more, I'll leave the weekend deep dive queued up here on the left-hand side. But we also did a stream, so I would encourage you to watch that if you want. And if not, thank you so much for tuning in. I look forward to seeing you on the next video. Thank you again.